The housing sector of the economy is going down in terms of home prices, rents, and new construction activity. I'm Dr. Bill Connerly. I connect the dots between the economy and business. And in today's video, I'm going to talk about why the housing sector is looking not so great. And we'll begin, of course, with the rise in mortgage interest rates. That affects single-family homes. We'll get to apartments in a moment. And it's important to notice that if a mortgage were taken out this week, compared to, say, the average of 2021, for the same principal amount borrowed, monthly payments would be 50% higher, plus or minus a little bit. So that is a big hit. But a house that's bought today would not be with the same mortgage loan as in 2021 because home prices have increased so much. Now, we've seen in that little tiny last month's observation a little bit of a downturn. It's such a small downturn that it's masked by the thickness of the line. But basically, we're in a situation where prices for single-family homes got so high that they were unaffordable for many buyers at the same time that mortgage rates were rising. So now it's going to be very, very tough, and we're already seeing construction decline for single-family homes. On the apartment side, rents rose significantly the last couple of years. This is the national average level of rent, and you can see the big spike in 2021 and so far in 2022. The rate of gain is milder in the last few months than it had been. I think rents will eventually come down. But when we combine both what we know about single family and what we know about multifamily, we have rising demand for both types. So it's not just people moving from apartments into single family homes, but rising demand for both types. That's what we would see if population were growing, but population is not growing very rapidly these days. So what's going on? What is growing is household formation. A household is one or more people, could be family, could be unrelated people, but one or more people living in one housing unit. And household growth surged in 2021. We do not yet have data for 2022, but it was probably up. So let's talk about exactly how the number of households grows. If an adult child moves out of the parent's home and lives by him or herself, that's an additional household. If two people have been sharing an apartment and they decide that they can each afford to live by themselves, that's an additional household. And if a married couple splits up and they live separately, that's an additional household. So we had many, many more additional households, but the population wasn't growing much. So what was going on? People had money. People had money. Remember that in the lockdown, we received stimulus checks. People who kept working earned higher wages, but we weren't able to spend all of the money in 2020 and to some extent in 2021. So there was an accumulation of cash in people's savings accounts, and folks said, I don't need a roommate anymore. So they got rid of the roommates. Some couples split up and kids moved out of their parents' basements. And as a result, we now have greater demand for housing units of all types than we had before. So the outlook for housing is dismal as of October 2022 because of a couple of things. First, those new home buyers, potential new home buyers who missed the opportunity in the last 2 years, they're now looking at very high home prices, very high mortgage rates. There'll be one or two of them buying their first home, but not very many. We'll also find that renters are looking at their expenses to fill up the gas tank of their car, to buy lettuce, to buy a Netflix subscription, whatever. And they're going to look at all of their expenses with rising inflation, and they're going to look at their apartment costs, and they're going to say, I guess I need a roommate after all. Now, this gloomy picture is somewhat counterbalanced by people who say to me, hey, Bill, we have been underbuilding housing for some years. And I don't think that's true, but let's look at what they say. They point to the number of housing starts. This is annual data from 1960, and you can see that in the period from the Great Recession, starting in about 2008 or so, we were building less than the historical average. And that is, sounds like a strong statement. But there's also something different relative to that historical average, and that is our population growth is not what it used to be. Yeah, if we were growing by 3 million people a year, we would need 1.5 million housing starts a year, but our population growth lately has been very, very weak. And because of that weak population growth, I do not believe that we have been underbuilding. I think that what we've been building is, if anything, the last couple of years in excess of what we need. So my conclusion is prices of houses are going to fall, rents are going to come down, the number of home sales will come down. Think about somebody who typically buys a newly built house. That person is usually leaving an existing home. And in today's environment, it means an existing home where the mortgage was probably refinanced, maybe 3%, certainly below 4%, possibly 2 point something. And that person is saying, gee, I'm going to leave this house with a 3% mortgage and get something with a mortgage above 6%. That's a much higher payment before you add any value in the form of a bigger house or nicer amenities. So I think that the move-up home buyers will be few. There will be some who have to move for a job. And what will be positive is I think home remodeling will be growing. People can keep the old mortgage and either add on some space or upgrade what they have. So that was probably the most positive news that we'll see. And I want to emphasize that although my outlook is a little bit dismal, it is not as bad as 2007, 2008, 2009. And there are two important differences. First, mortgage standards have been much tighter. So the people who bought houses in the last few years actually had to verify their income, and they had to put down a down payment in most cases. So they've got skin in the game. They're not going to have to default. And we've had about twice as much appreciation. That is, the rate of gain of home prices is twice as high as it was going into the 2008 recession. And as a result, anybody who can't make their monthly payments can sell their house probably at a profit, pay off the mortgage. So this is not going to be an overall economic collapse. So this is how monetary tightening is slowing the economy. It is hitting the housing sector particularly hard. It's not going to be catastrophic for the whole economy, but for those who make a living building houses or selling houses, it's going to be a tough time for a couple of years. I'm Dr. Bill Connerly. I connect the dots between the economy and business, and I also put out a monthly newsletter that I'd be happy to share with you. You can simply text the word econ to 42828. Thanks for watching.